Shares of regional bank stocks are on the rise, despite being downgraded by Moody's Investors Service. Prices plunged yesterday following the collapse of California-based Silicon Valley Bank and New York's Signature Bank.
Well, Mark Hamrick joins us now for more. He's a senior economic analyst at Bankrate. Mark, always good to have you with us. Tell us, many people have been talking about fears of a greater banking system collapse in the wake of SVB. How much of that is fear versus reality?
I think, fear is a powerful emotion, and it comes into play in situations like this. Some people remember the great financial crisis about 15 years ago, and obviously we had an economic crisis that was associated with a pandemic. And so there is a tendency for people to think that the current situation will be like the last one. And the reality is that very often is not the case, that every kind of crisis or mini crisis or major headlines, as we've seen in recent days, have a composition all their own. And I think that is the case here. I think this is a unique situation because of the unique time that we find ourselves in.
Well, I wonder, Mark, if you could put this in perspective. I mean, what role does the regional banking system actually play when it comes to the overall strength of the U.S. economy?
Oh, it's incredibly important. All the components of the banking system ultimately are important because this is how we conduct our finances as individuals, as households, for enterprises, nonprofits, and on down the line. And so there isn't one part of that system that is significantly less important than the other. They all have important roles to play. And so when the Federal Reserve gets into the game, as it has in recent days, talking about systemic risk, that's the reason. They don't want to allow a couple of episodes or so to infect the broader system. And I think that's why we're seeing a relief rally today, although we never want to make too much importance out of one day's activity with respect to the financial markets.
Well, Mark, do you expect, we're already hearing from legislators in Washington talking about the need for more regulations, particularly of the regional banking system. Do you expect that to happen then?
Well, predicting behavior on the part of elected officials in Washington is difficult indeed, but I do think that there will be a tough examination on the part of both regulators and elected officials as to what happened. I think we do know that some of what has happened are unintended consequences associated with years of record low interest rates, and then the really aggressive rate hiking that occurred by the Federal Reserve almost exactly a year ago. And now the question is the Fed done? And maybe it soon will be. That's a question to be answered in the coming days. But clearly, when you have major bank failures of the kind that we've seen, things were happening that were out of sight. And so the question is, can we bring those things into the sunshine in a better way so that regulators have better visibility, and then with that restoration and the continuation of confidence in the system?
In the meantime, Mark, bottom line, should people keep their money with these regional banks?
I think what we saw on Sunday night, Monday morning was an important show of confidence in the banking system on the part of regulators to remind depositors, particularly those at insured institutions, that their money is safe. And indeed, the regulators went above and beyond that to make sure that even previously unguaranteed money is safe. So the key is to make sure that your money, when you're talking about deposits, for example, fall below that $250,000 or less category per individual per account. That's true of banks, savings and loans, credit unions as well. And then it's $500,000 for a couple. And as long as you make sure you don't go above that level, you should be fine. And if you need to spread the money around, that's one way to do it. And of course, financial professionals will help you to make the right decisions with that as well.
All right. Mark Hamrick, thank you.
Thank you.